Every big move on a chart starts from one place, a zone where big buyers and big sellers place their orders. If you can find those zones, you do not need 10 indicators. You just need to know where the market already showed its hand. So in this video, I'm going to give you a simple price action trading strategy for beginners built on supply and demand. Just 3 steps: trend, zone, and the trigger. And I am going to show you the full method on a real gold chart with real trades that already played out. Not theory. Let's start right here. Here. First, the idea. Look at this strong drop over here. Price did not fall like this by accident. Somewhere up here, big seller placed large orders and the market could not absorb them. The area where that fall started, this small region right here, that is a supply zone. It is the origin of the move. And here is why it matters. When price come back to that same area later, those sellers are often still there and price gets pushed down again. Watch it on this chart. Price return to the zone here and look what happens. Rejected down again. And the demand is just the opposite. Look at this green zone down here, an area, or the blue zone you can see here, an area where strong buying started before. Supply is where selling was born, demand is where buying was born. That is the whole concept. Now, the 3 steps. Step 1, the trend. Look at this chart from left to right. See these peaks. Each high is lower than the one before it, and each low is lower too. Lower high, lower low, stepping down like stairs. This is downtrend. Sellers are in control, and that gives us the golden rule. In a downtrend, we only sell. We are not trying to catch the bottom. We are not buying against this. Every trade we look for on this chart will be a sell from a supply zone above. If this was an uptrend, it would be the mirror. We would only buy from demand zones below. Step 1 decides your direction and you never fight it. Now the step 2, the zone. On my chart, these zones are marked automatically by my supply and demand tool. As you can see, them as these shaded boxes, but you can also draw them by hand, and here is how. Find a strong move down like this one. Now go where it started. Look at this point, the last small push before the big drop. You draw a box around that pause. That box is your supply zone. Look how many we have on this chart, stacked one below the other, here and here and here. Because in a downtrend, price keeps creating fresh supply above as it falls. One more important thing, a fresh zone, one that price has not come back to yet, is stronger than a zone that has been touched many times. The first return to the zone is the best one. So mark your zone and then do what most people cannot do. Wait. Wait for the price to come back up into it. Step 3, the trigger. Price coming into your zone is not enough. Sometimes price goes straight through the zone. So you never sell just because price touched the box. You wait for the candle to confirm. Look at this example right here on the chart. Price pulls back up into the supply zone. Now watch this candle. It pushes into the zone and then close back down strongly with a full red body. That is the confirmation. This is the seller saying we are still here. That is your trigger to enter the sell. And if price close above the zone instead, then there is no trade. The zone failed and the trigger just saved you from a loss. That is the real job of step 3. It is not just an entry signal, it is the your filter against bad zones. Now the trade management, and it is simple. Your stop loss just above the supply zone. Look here, a little above the box, not inside it. So a small wick cannot take you out. If price close above the whole zone, your idea was wrong and you take the small loss. Your target, look down here at the next zone below or the last low. Now measure it with me. The distance from entry to stop is your risk. Call it 1. The distance from the entry down to the target is about 2 times that, sometimes more. That is what this label on my chart means. Sell 2R, risk 1 to make 2. You can see it marked on trade after trade hairs. With numbers like that, you do not need to win every trade. You just need to follow the process. Now let's read this entire gold chart together because the whole story is here. The trend is down, lower high, lower low, price falls, creates the supply zone, comes back up or get rejected, sell 2R, falls again, create the next supply zone here, come back, rejected again, another sell 2R, and again here. The same 3 steps repeating down the chart, trend, zone and trigger 4 times on our chart. And look where price is sitting now, right above the big blue weekly demand zone. I am not predicting a bounce. That is not what we do. But this is exactly the kind of area where a seller become careful because strong buying was born here before. The zones do not tell you the future. They tell you where to pay attention. So that is the supply and demand trading in 3 steps. Find the trend and only trade with it. Mark the zone where the last strong move started and wait for the trigger candle before you enter. The strategy is simple. The discipline is the hard part. Waiting for the price to come to your zone and doing nothing until all 3 steps agree. The tool that draw these zones on my chart is linked in the description if you want it. And if this made supply and demand finally make sense, subscribe. On this channel I break down gold and forex trading on one clear step at a time. I will see you in the next one.